Gala Games is down over 90% from its highs, and the biggest risk right now isn't price, it's trust. Stay until the end because I'll show you the exact level that decides whether Gala stabilizes or breaks down further from here. What's up everyone? Welcome back. Today we're breaking down Gala Games and its token Gala, why it has performed so poorly, why the outlook is more bearish than bullish, and what actually needs to happen for this chart to change. No hype, no narratives, just market structure and reality. Let's get into it. Let's start with the only thing that doesn't lie, price. Over the last 12 months, Gala has shown clear lower highs and clear lower lows, and every rally has been aggressively sold into. This token once traded near 80 cents. Today it's sitting around 0.004, down more than 90% from the peak. And here's the key takeaway most people miss. This isn't just a bad chart, it's a market voting against the project. When capital believes in the future, it accumulates. When it doesn't, it exits. Right now, Gala is still in exit mode. Before we talk catalysts, we need to be honest about why Gala specifically has struggled more than most. When liquidity leaves crypto, it doesn't leave evenly. Bitcoin holds up, Ethereum consolidates, speculative sectors like GameFi get hit hardest. Gala sits high on the risk curve, so when capital turns defensive, it's one of the first tokens sold. Token inflation and supply overhang. This is one of the biggest long-term issues. Over time, circulating supply increased. Emissions created constant sell pressure. Long-term holders absorb dilution. Even if emissions slow, the market remembers, and once confidence in token economics is damaged, large buyers don't rush back in. Structurally bearish technicals. From a pure chart perspective, Gala remains below all major long-term moving averages. No weekly trend reversal has occurred. No confirmed accumulation zone has formed. That means any bounce so far has been counter-trend, not the start of a new cycle. Hope doesn't reverse trends, structure does. GameFi used to be one of the strongest narratives in crypto. Today, capital has rotated into AI, layer 2 scaling, real-world assets, and Bitcoin-focused plays. Blockchain gaming is now a prove-it sector, not a hype sector, and that's a big shift. Governance disputes, past minting issues, and ecosystem confusion all leave scars. In crypto, trust is fragile. Once it cracks, price reflects that loss of confidence long before sentiment recovers. To be fair, Gala hasn't stopped building. There have been infrastructure upgrades, ecosystem tools, and node and staking plans. But here's the hard truth, markets no longer price roadmaps. They price results. Until these developments produce real user growth, sustained transaction demand, and sticky player retention, they remain potential, not value. This is the most important part of the video. Even with upcoming catalysts, the base case outlook for Gala remains bearish to neutral. Price is the verdict. Right now, price is telling us demand is weak, confidence is low, and risk remains elevated. No trend reversal means no confirmed bullish thesis. Dilution overhang still exists. Even improved mechanics won't matter until investors trust long-term supply dynamics. That lack of clarity keeps larger players sidelined. GameFi is not attracting fresh capital. Without a strong sector tailwind, individual tokens rarely recover on their own. Big roadmaps mean big expectations. If adoption, retention, or monetization disappoint, price reacts immediately. Competition is intensifying. Better funded studios and stronger IP are entering the space with cleaner UX and less reliance on token speculation. Gala is no longer early, it's competing in a skeptical market. Bottom line, upside exists, but it's speculative. Downside risk remains structural. Let's talk about what actually matters. As long as Gala remains below 0.02 to 0.025, the macro trend stays bearish. A sustained reclaim of 0.03 with volume would be the first sign of improvement. A weekly close above 0.05 would invalidate the long-term bearish thesis. Until then, rallies are counter-trend. This is a confirmation asset, not a prediction play. Now let's talk about where things stand right now. With Gala already trading around 0.004, we're no longer discussing theoretical downside. We're talking about survival levels. The 0.0038 to 0.0042 zone is acting as short-term support. If this holds, a technical relief bounce is possible. Shorts may cover, and price could revisit 0.006 to 0.008, but that would still be a counter-trend rally, not a recovery. A daily close below 0.0035 opens downside toward 0.0025 to 0.003. This is where confidence erosion typically accelerates. If broader crypto sentiment weakens and buyers fail to step in, price could slide toward 0.0015 to 0.002. Liquidity dries up, narratives turn hostile, and only speculative traders remain. Historically, this is where long bases form, not fast recoveries. In a full risk-off environment, the extreme downside sits near 0.001 or lower. This is capital preservation territory, not opportunity hunting. Right now at 0.004, upside requires proof, but downside only requires sellers to stay patient. Gala is sitting at a level where either a base forms or confidence breaks further. Until price reclaims key resistance and proves sustained demand, the path of least resistance remains sideways to lower. Patience here isn't bearish, it's disciplined. If this breakdown helped you cut through the noise, hit like, subscribe, and comment what project you want dissected next.